Hey, Equity Mates. Really appreciate the support and love that we get from all of you guys. Obviously, we are doing this for free. We don't expect any money from anyone, and we do it for the love of investing and equities. But there is one thing that we could really appreciate your support from. Ren?
Oh, great. Yeah, look, we don't ask for money, although if you want to send it our way, we wouldn't say no. But the biggest thing you can do to help us grow the podcast, to get more people listening, is to just jump on iTunes or whatever podcast platform you use and give us a rating. Ideally 5 stars. If not, if you think we're only worth 3, then that's your decision. But yeah, it helps us massively in the ratings and to get more listeners and to grow the brand.
Nice. Leave a review and also tell your mates.
Equity Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.
Welcome to another episode of Equity Mates, a podcast where we help you learn to invest in 20 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going, bro?
I'm very good, Bryce. How are you?
Mate, can't complain. We're on summer holidays right now.
We are. We're probably kicking back, not thinking about investing,
Yes.
but the show must go on.
The show must go on, and that's why we're here for our second installation of our deep dive into an Australian company that we've randomly selected from the ASX. No, not 200, the ASX in its entirety. And today, Ren, after you typed in the letters L and R into the ASX, we came across LRS, which was Latin Resources Limited. So to give some listeners some context, if they have just joined us on the show, Ren and I are on our summer break, feet up, really relaxing, hopefully.
We should say I'm actually working until like the week of Christmas, so I'll actually just be at work today whenever people are listening to this. I think you're going to be doing something similar.
Yeah, I'm actually going to be at work as well. But anyway,
yeah, we're just we're refreshing and doing some work we're doing some 2019 planning for Equity Mates.
That's right. And so to keep the content going and to keep everyone interested in investing, we've decided to do a deep dive into an Australian company, mainly just to give ourselves a refresher on some of the ways that you can research companies and try some new research techniques, and also give all of our listeners an insight into some of the ways and resources that you can get information and start to form a bit of a thesis about companies. So last episode on this, we did Baby Bunting, which we both thought was a pretty interesting company to research. And this week, Ren, we've got something completely different. We've got a resources company, which we were kind of hoping not to come across, to be honest.
Yeah, but we were doing random company generation on the ASX. You're going to get a resources company.
Absolutely. So Latin Resources Limited, the ASX ticker is LRS, and it is an exploration and evaluation company of mining projects, particularly lithium and cobalt, Ren.
Yeah,
How exciting.
How exciting. Lithium, actually quite exciting. So
True.
What we'll do, we'll break this down into sort of 3 main sections. We'll start with the company itself, then we'll talk about the industry and competition, and then we'll talk about its financials and a little bit about valuation.
Sure.
Any other key headings you want to insert?
No, I think broadly speaking, that's a great way to structure this. So let's crack on in.
All right. And as we did with Baby Bunting, we'll sort of talk about how we went about finding the information as we go, because really the value in this is obviously breaking down the company, but more so breaking down how we broke down the company.
Yeah. Nice.
So you hear about a company, and first thing, I Googled it, ASX LRS, and you see the share price, and it's actually trading at less than a cent. So
cheap, Ren. Cheap.
That was my first question. It's actually, as of the day that we're recording this, the 11th of December, it's trading at 1/3 of a cent. So
Wow.
0.003 cents. So you can get 3 and a bit shares for 1 cent. Very cheap.
I want to point out that both of us saying cheap in terms of the valuation of the company is not what we're talking about here. We're talking about literal dollars and cents.
Yes,
You
yes.
can get it for less than a cent.
A fraction of a cent might be very expensive if it's pissing away even more than that.
If it's worth 2 cents.
But no, if it's worth two, if the whole company's worth 2
Yeah.
cents. I was gonna say if you're buying it, Anyway, I got what you're saying.
So it's a good place to start when you look at the share price. And one other thing I think to note with it is that there's been very little movement in its share price.
Yeah, it was trading as high as 2 cents, a full 2 cents in January,
It's
and then it
true.
was pretty consistently at 1 cent, and then it fell into the fractions of a cent in October of this year, 2018.
Yes. So not as volatile as a lot of other companies out there on the ASX, and that will become more evident as we dive into the company a bit more. So LRS is a mineral exploration company focused on identifying mineral resources, particularly in Latin America. And I think, Ren, it's important that we stress that it's an exploration company at this point.
Yeah, so why don't we make that distinction? What's the what is it? You would say life cycle of the resource industry, or how?
Yes. So a lot of these companies, and this is the stage that this one is at the moment, is getting capital from its investors to go out and essentially explore areas where they think that there is going to be large deposits of minerals, particularly in this case, lithium and cobalt, as we said. So their stage in the life cycle at the moment is exploring and discovering where these minerals might be before they then progress to the next stage, which I'm sure they'll then ask for further capital from their investors to actually then go and start mining and extracting or whatever they do with those fields. And they may go on and sell it. I'm not too sure.
So to maybe be a little bit more specific,
Yep.
there's probably 3 key stages that we should talk about. So the first stage is the explorers, and that's what Latin Resources is. And they literally will either buy land, but more generally, usually they won't buy the land. They'll just get mining rights from the land.
Yep.
So it might be government-owned land. They'll get mining exploration rights from the government, or it will be big landholders, big agricultural firms and companies and families, and they'll say, we think there might be whatever the mineral is, gold, lithium, cobalt, whatever, coal in your land. We want to explore it. These explorers get granted the rights to explore, and then they literally just start drilling in random spots. Well, I'm sure it's not random. There's a lot of science to it. And the explorers, they make money if they strike gold, literally. If they find gold, and then their exploration rights that they have suddenly are worth exponentially more than they paid for them. So as an investor, obviously if you are really close to the mining industry, you might have a knowledge edge because you might know who a really good explorer is. You probably have some idea of where minerals might be. But generally as an investor, it's a bit of a lottery ticket because and we'll get to lithium in South America in a second, but there's lots of companies that are generally exploring in similar areas, and whoever strikes minerals strikes gold. So that's the first stage. There's a lot of explorers on the ASX just because Australian investors are attuned to them and have invested in them before. The next stage, and so then if an explorer finds minerals, then they'll either decide to create a mine themselves, or they'll sell the rights to a mining company, and that's your standard mining company. Probably don't need to explain that too much. And then the third stage in this sort of resource extraction industry is the processors. So they're the companies that turn iron ore into steel, turn their oil refineries. They're all that processing stage of the extraction process. So you'll have companies that are vertically integrated and explore, mine, and process, and then you'll have companies that sit on different stages of the life cycle of the supply chain. Latin Resources that we're talking about now is purely an explorer, at least in December 2018.
Yes. And they have gone out and, as you said, asked for a lot of concessions, for mining concessions and exploration concessions for hundreds of thousands of hectares throughout Latin America from I'm assuming the government's over there. So that's where they're at right now.
One last thing about this, the different life cycles. There was a study of mining explorers on the ASX in 2014, and they found that one of the riskiest things an explorer can actually do in terms of just losing investors' money is actually finding minerals and then deciding to build the mine themselves. Apparently, 50% of the explorers that found minerals and decided to mine themselves actually failed.
Wow.
Yeah, because obviously it's capital intensive. It's a different ball game.
Skill set. It's a new skill set.
Yeah, so you might invest in this case, Latin Resources. They may strike lithium, and you might, be celebrating. Then they might decide to mine it themselves, and at least from this ASX study in 2014, half of them fail. So there's a lot of risk, but there's also a lot of reward.
Yeah. The thing is, I have a feeling from looking at the milestones for 2019 and 2020 for Latin Resources that they may be going down the track of mining, because their fourth milestone of four in the first quarter of 2020 is commence plant construction. So I'm not sure if that means they're going to start mining themselves if they do find, but who knows? We'll have to keep an eye on that. Yeah. Anyway, so Ren, they're looking for lithium and cobalt, two minerals that are, have been talked about quite a lot this year for reasons, batteries, and they're used in a number of, primarily batteries, I guess. And there was a spike in demand for lithium and a lot of the small lithium stocks at the start of the year. And, it's been on a bit of a run, to be honest, for the last couple of years, and a lot of chat about it. I've actually invested in Galaxy for that reason.
Yeah, I was going to say, a lot of chat from you about it.
So it's been a pretty hot topic, the industry. You wanted to add to that?
No, I think you summed it up nicely.
Beautiful.
So you touched on it there. Let's quickly cover off on the company, because we're getting very quickly into the industry more broadly. So you touched on it there. It's based in South America. Now, the reason that it's based in South America is it's a real lithium producing region. Argentina, Chile, and Bolivia are known as the Golden Lithium Triangle, and those three countries actually produce 2/3 of the world's lithium supply. So, 66% of the world's lithium comes from this area, and this company has more than 100,000 hectares of exploration concessions. So they have 100,000 hectares of land on which they've been given permission to explore and to see if there are lithium deposits. In that, they have 4 major projects, 2 in Peru and 2 in Argentina. I know Peru wasn't in those 3 countries I mentioned before, but it's nearby, and they obviously have a hunch that there's lithium there as well. So that's the business model. They've got these exploration concessions, and they're trying to strike lithium.
Will they be successful? Who knows? It's pot luck. So yeah, I don't really have anything to add there, Ren. You're pretty much reading from my notes. So let's move on to, I guess, lithium as an industry. Is Latin Resources in the right exploration industry at the moment? You have some thoughts on this?
I do. So generally, as you said, lithium is booming. The estimates are primarily driven by battery storage in electric cars and solar. 2015, there was an estimated 170,000 tons of production. By 2020, they expect demand to be at 270 to 340,000 tons. And by 2025, it's expected to be 500 to 600,000 tons of demand. So there's going to be a massive need for lithium, and obviously with demand comes higher prices. Just in terms of where I read this to research this company, literally just Googling lithium. There's so, as you said, it's been such a hot topic. There's been so much written about it.
Yeah.
So you can drown in articles about it. When you look at the state of the industry, when the lithium boom started, there were really 4 companies that accounted for about 90% of the global lithium supply. So there was a Chinese company, 2 American companies, and a Chilean company. So it was very heavily concentrated at the top. And what that has meant is that there's been a lot of emphasis on finding explorers, because obviously the big lithium buyers want to diversify their sources of supply. They don't want to be reliant on 1 or 2 major producers, because then they become price takers. So although, and the industry is expanding, but it's still quite top heavy. So that's good news for explorers, because if they find lithium, it's likely that there'll be a number of interested parties looking to buy it to, sort of crack into this industry. That's the only other notes I have about the industry is that Citibank reckon Australia is rich in lithium, and they think that it could supply over 50% of the lithium market by the end of 2018, so this year. I'm not sure how close we are to that, but yeah, Australia is and could benefit even more from lithium.
Well, we've got some pretty big companies in Australia in terms of market cap that are major players in this industry and would be peers of Latin Resources, I would suggest, or competition for Latin Resources. So to give a bit of a comparison in terms of market cap, we're looking at 5 companies that are in this space, big players, the largest being Pilbara at the moment, based on market cap at 1.3 billion. Galaxy Resources, which I'm invested in, is 978 million. Altara is 318. Kidman Resources is 541, and Tawana is $179 million into all market cap. Then you look at Latin Resources, and it is 8.64 million. So a bit of a way to go up against the big players of Pilbara. But
I think it's Pilbara.
Pilbara?
Yeah.
Okay. Nice. Thanks for the correction.
Well, someone's gonna write in about it if we don't correct ourselves on air.
To give you an indication, though, they have a resource size, and I'm assuming this means the resource that they are currently exploring or mining. Well, they are miners of 200 million tons. So they've got quite a large resource size. If you compare it to Galaxy, 38 million tons, and Kidman, they have 120 million tons resource size. So some significant volume there. Interestingly, at the moment, where lithium is $115.34, that's a 20% slide this year, and also a 6.8% slide in the last 6 months. And if you look at the market cap of these companies since sort of July 2018, Galaxy was 1.4 billion and it's now 978 million. So its market cap is following the direction of the lithium price at the moment, which is not surprising. So that's just something to round out a bit of a view on the competitive landscape in Australia at the moment that Latin Resources are going to have to come up against.
Yeah, definitely. Now, for listeners, where did you find that lithium price?
So I literally just typed in Google lithium price index, and it was the first link that came up, tradingeconomics.com, went into that, and boom, it's pretty much got all of the different sorts of minerals and commodities that you can think of, and quite a nice table to read it from. So it took me all of about 4 seconds to find that.
Yeah, nice one. So to summarize where we are at this point, we've really just used Google, had a flick through the company's information, and just had a look at sort of general, articles and analysis written by banks and brokers and stuff like that about the company. We sort of know broadly the industry. We know a little bit more specifically who the competitors are in that industry and the different stages of competitors, explorers, miners, processors, and then specifically about Latin Resources, we know what they're doing, where they're trying to do it, and how they've gone, and then what their plans are for the future. So at this stage, we have a lot of qualitative information.
Yeah.
Probably time to put some numbers around it.
Yeah, back it up with some solid, juicy numbers,
Yeah. Do you want to kick it off?
which we don't have.
Well, we've got numbers.
They're not solid or juicy.
No.
They're all red.
So you said before that they have a market cap of 8.6 million. Do you want to run through some of the other numbers that we have for the company?
Sure. So the very top line of your profit and loss statement, we're looking at operating revenue, and we're looking at about $27,000. Correct me if I'm wrong, Ren.
Yeah, no, that's right. That's just
$27,000.
you could earn
more at work.
You could earn more than that. Yeah, exactly. And we're not valued at $8.6 million by our employers.
We should be.
We should be. We're less likely to find lithium though. So
Yeah, I had to double take when I first looked at this, because normally we're talking in the millions here, the big dollars. But look, in 2000 the last financial year, they did $27,000. Total revenue, when you add up a few other little bits and pieces, came to $381,000.
yes.
So bit of a bump up there.
But we should say, to be expected, just because, as we talked about before, the nature of the business is they're trying to strike gold, metaphorically, lithium, literally. So you're not going to be earning a lot of income as you go. You're not going to be earning a lot of revenue as you go. It's really just about not losing all your money before you find lithium.
That's right. So Ren, we can reasonably expect then with that sort of revenue and what you would imagine to be quite high expenses. So the operating expenses were 1.8 million. We're going to see a loss. There's not going to be a profit here. So for the last year, they took home a net profit of negative $2.3 million.
Yeah.
Which not surprising, as you said, it's by the nature of their business. So be it. Not necessarily a bad thing in this climate or context, I would suggest.
Yeah, definitely. So their cash flow in terms of the actual cash leaving the business was negative 1.95, and then their reported loss, their net profit was negative 2.3, negative 2.38. So the difference there is that 1.95 million of cash leaving the business, and then there would have been some other things where they lost value in that they had to write down that went to their profit and loss.
Yeah.
The other side of it, do you have anything more about their income statement?
No, pretty well covered. I think we can move on to the balance sheet.
Yep. So I had 1.02 million in debt, and then 563,000 in cash.
Yep.
Not too bad in terms of the amount of debt they have, but if you think that their cash flow is about negative 2 million a year, and they've only got 563,000 of cash in their balance sheet, what that likely means is they're either going to have to go to their shareholders and raise capital that way, or go to the banks and raise debt that way.
And going to the banks is with very little cash flow would be quite a daunting decision, I guess, because obviously with bank debt comes interest payments, and you need to be able to have some sort of cash flow to pay off those interest payments. So you don't want to be going down that rabbit hole too far. I would imagine they raise through equity.
So that's why a lot of the miners are listed on the stock exchange, so they can raise money to do that. So that's the financials in brief. I don't think we need to go too much into that.
No.
So I guess the question then is, so how do you value this business? Like the market gives it a value of 8.6 million. It's losing money. It doesn't have a lot of cash. So before I started looking at this, I had no idea. It seems a lot like a lottery ticket. They either find minerals and they make a fortune, or they don't and they just run out of money and you lose your capital. So as I was doing some research, there was a bunch of sort of presentations and articles on different ways you can value these explorers. There are things like you can look at, there's a joint venture terms method, which basically looks at the probability as a percentage chance of success, or there's multiple of exploration expenditure, which is about the amount they've spent.
Mm-hmm.
But I didn't really understand the underlying logic behind that, because who cares how much you spend?
Yeah.
It's about what's the likelihood that they will actually find something and be able to spit cash out at the other end.
Yeah.
In theory, you would think that a really efficient explorer that got lucky could spend,
Peanuts.
Yeah, peanuts, and find lithium within a week if their first drill is a success, and then others could drill for years and never find anything. So I didn't really understand the multiple of exploration expenditure method, but really I didn't none of the methods seemed to make as much sense as what we talk about when we're valuing companies in terms of like the cash flow that they can spit out as a part business owner, the stuff that we always talk about. So my thought is you don't try and perfectly value these companies. Instead, if you want to play mining explorer bingo and try and hit the lottery, I know I mixed my metaphors there, you need to invest in a lot of them. There would have to be some degree of active management, I'm sure, because they could probably go to zero very quickly. But the most important thing would be not to put all your eggs in one basket, to diversify your play, because you really are, you're buying a ticket to the mining explorer lottery.
Yeah, big time. Completely agree, Ren. I didn't really have an idea of where to start with this sort of stuff, considering that they really don't have anything at the moment. All we really know is that they're playing in the right area, I guess, in terms of what people consider to be rich areas of lithium and cobalt. So that's a positive start. But yeah, I think my biggest learning from Galaxy, being invested in that, is that if you don't keep up to date with the underlying commodity and what's affecting its price, the analysis and predictions for what's going to be happening for it in the future, demand, where it's going to be used, these companies are very, very volatile. And as you said, Ren, it can go to zero very quickly. And if you're not actively managing your investments in these, you can find yourself hung out to dry pretty quickly. Or alternatively, it can go the opposite way. But I think that's my biggest sort of takeout from these sorts of companies, is the need to be very active when it comes to, or anything commodity based, really.
Yeah, definitely. Now, to wrap it up, just to give people an idea of the divergence of outcomes that you could get with these companies, I referenced that ASX study from 2014 around mineral explorers and how the riskiest thing they could do was actually build the mine. So that same study put $1,000 into 100 randomly selected junior miners or explorers. It back tested it, put $1,000 in 2004, and then looked at how it would have gone in 2014. Overall, you would have made 60% of your money, or 4.9% on an annual basis over 10 years. So not bad. Probably a little bit below market returns, but not bad.
Yeah.
And the recession was in there. Not in Australia. We avoided a recession, but overseas. But of the 100 companies, 22 made money and 78 lost money. And of that 78, 18 were worth less than 1% of what you bought them at.
Oh.
So if you picked the wrong 18, you
Burnt.
could have gone to zero very quickly. But if you picked the right 22, you would have done all right. But yeah, overall, pretty massive divergence of outcome. So yeah, as we said before, just diversify your lottery tickets for the Mining Explorer lottery.
Absolutely. All right, Ren, well, let's wrap it up there. That's LRS in our second part for our deep dive into Australian companies. Next, we have another industry, which is good. We're diversifying our companies that we're discussing. So looking forward to that one. Just to wrap it up, what was the main sort of sources for your finance? Where'd you find the numbers?
The numbers, mainly Yahoo Finance.
Yeah, nice.
Yeah.
Likewise. I quite like Yahoo Finance. Good. Yeah. All right. Well, good to chat. And are you going to go invest in lithium?
Well, look, I think lithium is an interesting industry, but I haven't done anything yet. Who knows if I will.
Nice.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.
Equity Mate.
So, Ren, some listeners would be surprised to know that there is some structure to our madness behind the mic. 2 episodes that we're going to consistently do over each month is Ask Us Anything and our book club. Ask Us Anything we're going to do on the last episode of every month. We're giving you guys the opportunity to ask us literally any question you want. It doesn't have to be equity. Literally, it doesn't have to be equities related, although we will do our best to answer the equity ones. Hit us up on our website, equitymates.com. There's a section there, Ask Us Anything, and hit us up with a question, and we will then answer that on the last episode of our month. And Ren, book club?
Well, to answer the most common question that's everyone's asking, the way that Bryce keeps his hair so perfect, it's fake. It's a wig that he pulls out for photos. But ask us anything other than that.
It is funny that that's the most common question
Yeah,
asked.
I get it. I ask myself it every day. In terms of book club, reading is a great way to learn about investing. We keep hearing it in our interviews, so we figured, how do we take our listeners on a journey and make us read a little bit more ourselves? We started a book club. Jump on our website, equitymates.com/book club. You can see the book we're reading. You can buy it. You can read it. Not on our website, but you can read the book, listen to the episode, join the book club. It's great.
First episode of every month, we'll review the book that we read previously and also let you know what book we're going to be reading for the coming month. So that's Ask Us Anything, last episode of every month. Book club first of every month, and then in between it's going to be a random mayhem of mess, so get on board.
Yeah.